are you? How you doing?
Good. How are you?
Doing amazing. Thank you for being here today. I appreciate it.
My pleasure.
Cool. So first of all, I just want to talk with you a little bit before we get started. I've been following your content for a while. I really appreciate all the newsletters you put out on LinkedIn, and I read them from top to bottom. So thank you for always putting out great content, and truly it's valuable, and I know your mission is about education, so thank you.
Thank you for the kind words. I do appreciate that. It means a lot to me. That's why I do it.
Good, good. Happy to hear. So, my plan for this podcast is I'm not going to take up too much of your time, but basically, I just want to start with a brief introduction. We'll go through a little outlook of the REIT industry and real estate investment and finance industry, and then you'll give some advice to Baruch students, whatever. Wrap it up at the end, edit out the things that we don't need, and we can go from there. Welcome, I'm Mr. Auerbach. So, for everyone to know, my name is Evangelos Ansoulis. I am the head of marketing for the Baruch Real Estate and Finance Club, and today we have a special joining us, Chief Investment Officer of Hoya Capital and Fish aficionado. So, David, we'll just start out by a little background of how you got to where you are today in terms of professional experience and kind of give an overview of from where you got at to where you are today professionally.
Sure. Thanks for having me, Evangelos. I do appreciate it. It's great to be here speaking to you and your fellow students. I've taken a very interesting career path to get to where I am sitting today. I graduated from the University of Texas at Austin in May of 1999 and joined a person that had rented some space from my father in his office, who was a CPA and investment advisor. I had always known that I wanted to be on Wall Street when I graduated college. I didn't know what necessarily capacity that was going to be, but growing up, I was always fascinated by the New York Stock Exchange and the floor brokers and life as a Wall Street veteran. So I interned with him for a couple of years. I got my licenses, and as I was going out on my own, my boss had I was supposed to have a meeting with a prospect, and my boss at the time, was not happy about it because the prospect wanted to have lunch with me. And my boss said, it's great, this prospect wants to visit with you, but you can only do it after market hours. You can't go meet them for lunch. And I didn't understand. And he basically said, you're mine during market hours. If you want to build a book of business, that's on your time, not on my time. Well, something I can leave with you, if there's anything to take away from this conversation today, is that networking is a 24-hour a day, 7-day a week job. There is no set time of when you are going to network and meet with folks. And I told my advisor that, or my boss that, and we butted heads, and I told him it was the stupidest thing that I had ever heard, and I got fired the next day. So way back in the day, they used to publish help wanted ads in the local newspaper every single day. And I did happen to respond to an ad that indirectly wound up being the Green Street Advisors trading desk, which is based in Dallas. And for those that don't know, Green Street was considered to be the preeminent REIT research firm. This was to be a trader on their desk. The desk does not exist anymore today. But I started on the Green Street trading desk in March of 2000. I lasted there for just about a dozen years. I joined another broker dealer here in Dallas that focused on the world of exchange traded funds. And he also had a small book of REIT business. And so from that point on, I was working with brokers and clients and people in the business focused on both REITs and separately ETFs. But inside the world of REITs, if you think about REITs being income vehicles, there's all these other different assets like closed-end funds and MLPs, master limited partnerships, utilities, other income producing sectors that are out there. And each sector has its own little group of investors, institutional investors, the smart money, I guess you would call it. And I was able to build relationships inside all of these different groups that when I joined a broker dealer ahead of COVID, it was focused on placing new issues of these various sectors with these investors. And then during COVID, I joined up with an ETF issuer that was looking to launch REIT ETFs. We launched two funds, and I left them in August of 23 and then joined up with Hoya Capital in September of 23. I've been there for a year now. We have more than doubled our assets under management over the past year. And we take a education first approach. As you mentioned, it's my job to educate investors, advisors, and everybody in between about the whys of real estate investing. We see so many news headlines hit the tape every single day or, on the evening news about, the death of office, the wall of commercial real estate that's coming due, all these negative headlines out there about real estate. And REITs are just one little tiny facet of the world of commercial real estate that I try to educate people how it's important to, as I say, peel back the layers of the onion to really understand the true story and the true impact about what's going on in the world of commercial real estate and how this one little company that's part of a bigger universe is not seeing the same issues that many other companies out there are facing.
Got it, got it. And I couldn't agree more when you said networking is a 24/7 job that never stops. And I think that kind of segues into what we're going to talk about later into the conversation. Taking a step back, can you just kind of give an overview of what is a REIT and how do they function within the world? Like, why is it important that students understand a data center, for example, or what are REITs?
So a REIT is just an income pass-through vehicle. That's all that it is. But the question is, what type of property is a REIT? And so there are many different sectors that make up REITs. Office buildings, strip centers, malls, apartments, self-storage, towers, data centers, manufactured housing. There's like 20 different sectors that are out there. There used to be a couple of student housing REITs. The largest one was called American Campus Communities, and it was acquired by Blackstone just a couple of years ago. So right now there is no publicly traded REIT devoted to student housing. But to answer your question, we use REIT-owned properties every single day. We are using a REIT right now to facilitate this conversation through a data center. If you order packages off of Amazon, you use 3 different REIT sectors to get that package delivered to your doorstep. A cell tower most likely to place the order, a data center to process the order, and an industrial warehouse to get the order to your doorstep. So if you go to Starbucks to get a cup of coffee, if you go to the drugstore to get a prescription filled, if you go to the grocery store in most cities to get weekly groceries, you're using REIT-owned properties every single day. And it's a very easy way for an investor just to sit back and collect what I call passive income by just leading their lives and going about the normal course of their daily business.
Definitely. And I think you can speak to it better, but investing in REITs, you kind of need to have a long time horizon, maybe 20 to 50 years. Following up on that question, why do you think that REITs are an essential part, especially for long-term investors, of a diversified portfolio, as especially compared to, all the hot stocks today like AMD, Nvidia, and sometimes we get caught up in hype of things, but why is it important, REITs, that is, in a diversified approach to investing?
Great question. It's basically REIT 101 that you're asking, so you've got right to the heart of the matter. As I mentioned, they're income pass-through vehicles. If you think about how REITs have to pay out 90, if not 100% of what they call their net taxable income back through to investors in the form of dividends. So if a company earns a profit, most, if not all of that profit is going to be pushed through to shareholders. And to answer your question, using that 25, 50 plus year time horizon, think about the amount of dividends that you would earn from a company, whether it's monthly or semi-annual, or monthly or quarterly, over the course of that 25 to 50 years. plus potential stock price appreciation of the underlying stock in the market, you could be talking about the difference in a portfolio value that has 6 figures of worth and 7 figures of worth. So REITs, typically in a typical asset allocation, is what it allows you to generate that income so that you can go out and play those high flying stocks that you were talking about just before. But the REITs are basically the ballast of the ship that keeps your portfolio afloat. And so REITs are not day traded vehicles. But if a company pays you, again, hypotheticals, $2 a share a year in dividends that grows, and let's say over the course of 50 years, they've paid you $100, $200 in dividends potentially, with a rising stock price, hopefully, compounding that over the course of that time, you could be talking some significant income in your pockets over the life of that investment. One more point to add, REITs are part of the major stock indexes. So the S&P 500 has 30 REITs in it. There's a lot of REITs in the mid-cap S&P mid-cap 400, the small-cap 600, the Russell 1000 or the Russell 2000 indices. And why I mention that is that these REITs have to overcome a lot of hoops and hurdles and certain minimum requirements to be able to be included into those indices. And so because they've frankly stood the test of time, have weathered the storm, have gone through the clouds and rain and through the sunshine as well, they've been able to achieve these index status, that it takes a lot for it to kind of be removed from that. So, if you're just trying to tiptoe into REITs, go out and buy any of the REITs in the S&P 500, and it's a pretty good place to start as far as building a REIT portfolio.
That's perfect. I'm elated that you said that. I think, well, compound interest is, I think, the eighth wonder of the world. But as we go into the correlation kind of between REITs and bonds or REITs and the broader stock market, can you just kind of give students an overview of how maybe that's changed over time or how REITs are correlated to bonds in the market, generally speaking?
Right now, REITs trade in lockstep with the market. So if the Dow's up, REITs are up. If the Dow's down, REITs are down. It seems like there is no negative correlation. It used to be that REITs were the contra performer to the market. So if the market was down, REITs would be up and vice versa. And that all changed during COVID. When you look at REITs versus fixed income, it's why the 10-year Treasury number is so important. Because in my view, people compare the dividend yield that REITs generate versus the 10-year Treasury, which is basically the yield on the 10-year Treasury bond. And ideally, a REIT investor wants the spread between REIT dividends and the 10-year Treasury to be, 2, 3, 4, 5% wide. You're getting paid a lot more to own REITs than to own bonds. And through COVID, coming out of COVID, up until the past year or so, fixed income had a higher yield than REIT dividend yields did, even though the REITs were raising their dividend yields back from pre-COVID low levels, from COVID low levels, that the 10-year Treasury kind of held that number above 4% for the longest time. So I said 4% was the magic number. If the 10-year goes below 4, it bodes well for REITs. And if it stays above 4, it's negative for REITs because right now the average is about 4.5% to 5% for the average REIT dividend yield, depending on the universe and what you look at. So that's why it's so sensitive to what the 10-year Treasury is doing. Obviously, with what happens over the next, let's say, year with potential interest rate cuts, does that push the 10-year Treasury yield lower as REITs keep raising their dividends and hopefully the dividend yield continues to go up? That spread will once again widen out. And one other interesting point to note, if you play preferred stocks, because there's REIT preferred stocks that are out there, you can add a couple of percent of additional yield into your pocket because of where you would sit in the debt cap stack. But you're going to sacrifice, let's say, stock price appreciation for that higher dividend income stream.
Got it. And just for those of the students that don't know, what is a debt capital stack?
Yeah, so in case the company goes default, who gets paid back first? So where, does the senior subordinated lender, the subordinated, the junk, the equity, the preferred, there is a table that would show you in the event of default who gets paid back first.
Amazing, amazing. And I'll just let you know I have two more questions. I can edit this part out, but I don't want to take too much of your time, David. I really appreciate it thus far. So for those students interested in pursuing a career within the REIT industry, what are some of the foundational steps, building blocks, academic-wise, that they can take on now for those that are in, their sophomore, junior, even senior year? If you can go back and kind of give yourself that advice, what would you give the advice that, we seek now?
Yeah, I would take a REIT class if your university offers it, Real Estate 101, something like that, where they would touch upon it. Obviously, joining the real estate club or a REIT club is very helpful. Many of the top universities or universities do have real estate schools, deans, professors that would help you out with that. As far as resources, the first thing I would recommend is REIT.com, REIT.com. That's the National Association of Real Estate Investment Trusts. They have a huge database of companies, of education, of anything you could ever want to learn about REITs. I'm in the process, it's live, we're refining it. I've created a REIT jobs board. It will also have internships on it eventually. That's allthereitjobs.com. As far as books are concerned, I would recommend Ken Campbell's Watch Out for That Rat Hole. It's the name of the book. Ken Campbell was one of the original pioneers of the REIT industry and provides a great history of REITs in general. Sam Zell's autobiography that he published before he passed away is another great book talking about the history of the REIT industry. Basically, there's a ton of resources at your fingertips by just typing in REIT education that you could walk away and learn a lot from the resources that are provided out
there. Perfect, perfect. And when are you going to your next Fish concert, Mr. David?
Not soon enough.
Not soon enough. Amazing. So just to wrap up, where can people find you, best contact you, and get a good sense of and take in the content that you provide education-wise?
I'm very active on Twitter, the Daily Repeat. I'm very active on LinkedIn. You could find me. I publish a daily newsletter that you could find out there as well. But my job is, like I said, to educate everybody that's out there about the world of REITs. And so happy to answer any questions or help the future generation of REIT leaders out there to make introductions to these companies.
Mr. David, thank you for your time today. This was the Baruch Real Estate and Finance podcast episode number 1. You were a special one. And I look forward to next time. And hopefully we have a lot of podcasts to come and the students will greatly appreciate this. So thank you, Mr. David. Appreciate it.
Thank you, Evangelist. I appreciate it.
Thank you. And that's where we'll end it. And we have start to end. That was awesome.
Thank you. I know we have to wait for it to process.
Yes. And I'm hoping that once I upload it, the quality is refined. And because this Riverside podcast is supposed to generate 4K video. So we'll see how well that goes. I don't know.
Don't show that you've stopped it yet.
Yeah, I haven't stopped it actually.